Hey folks, welcome to Why Losses Are Good. I'm going to talk to you about two trades. The first one is EDC. That's the Direction Emerging Markets Bull ETF. And the other is DPST. These are both losses. And I want to talk to you about losses tonight because I want to put trading into perspective. Many people think that a guy appears in front of a microphone and a camera, that every trade is supposed to be a winner, and nothing can be further from the truth. If you want to be a successful trader, you have to know when to cut losses. You have to know the charts. You have to know what signals the markets are sending you. And I'm going to tell you why we stopped out of these two trades. And with the EDC, which is a leveraged ETF, we stopped out with a 3.05% loss. With DPST, which is another leverage ETF, a very small loss, almost flat. And some of that was offset by a gain on STOR. We closed out all three of these trades on 5-1. But I'm only going to talk to you today about the losers because at current, so why am I doing this video now? It's important to do this video now because at current, it is around 9:30 in the evening, Sunday the 12th. And I'll show you the pre-market activity. So what you're looking at here are the S&P futures, again, 9:30 Eastern Standard Time, Sunday evening, Mother's Day, and we are weak. We are down about a percentage point. That's on the S&P. We have the NASDAQ, which is down 1.1%. So we're setting up for an ugly morning. So what does this have to do with the losses that I incurred on May the 1st? I'll tell you why. And this goes back to the title of this video, Why Losses Are Good. We'll begin. First, we'll go to trade alerts. This is on the members area. This is how I keep track of a lot of my trades. So we opened up DPST on 4/26 at 83.41 per share. Now, let's go to that chart. All right, so here's the 26th of April. So we entered it on a bullish key reversal day, and we did move higher. But then on the 1st, we stalled out, and then we flashed a bearish key reversal. And what that tells you is that the market sent you a signal. It told you that there were not enough buyers to send the shares up above this resistance level at 87.50. So what we did on this day, we acknowledged the signal that the market was sending us, and we said, first out, best out, let's get out of this. So we suffered a small loss, but thank God that we did, because if we did not take that loss, look at where we would be right now. We closed out Friday down at $70 per share, and you could see on the recent alerts tab on the website, the members area, we stopped out at 83.09. So let's revisit. So we stopped out at 83.09 here. Had we ignored the market signals, we would have taken a massive hit, a massive impact to our trading portfolio, and we would be sitting here right now with a big fat loss. And what will we be looking at as well? Think about this. This goes to your psychology. You would be looking at the futures activity at current. The S&P 500, we'll use the S&P, less volatile. At current is still down. It's just weakened up here a little bit more. It's still down about a percentage point on the night. So we are threatening to take out last week's lows. So what that tells me, going to a chart of the EDC, this isn't trading yet, is that we're probably going to retest this lower band of support on Monday. Think about if I had to sleep right now. I had the opportunity because I identified on the 1st that the market was telling me to get out of EDC. And if I didn't listen, I'd be sitting here right now saying, oh my God, trading is crooked. I can't make money at this. If you pay attention to the charts, you can make a lot of money. But unfortunately, at times, you're going to have to take losses. And when I look back on this trade, this is why I say losses are good. Thank God I took a loss. I could sleep at night. I'm going to go to bed in a few minutes. I'm going to feel great going to bed. I'm not going to have any problem sleeping because I took my losses. I moved to the sidelines. I'm sitting in cash. Now I'm able to act rather than react, if that makes sense. So what I'm looking for here is a break below, or at least a retest tomorrow morning of last week's lower band of support. So with regard to EDC, this is why losses are good. I'll follow up tomorrow with why losses are good. I hope you got some value out of this video. If you're not currently a member, please sign up for the 14-day free trial offer. With gold level, you get Trading Sim and Trend Spider. Trading Sim is a backtesting paper trading simulator. You start off with a $160,000 trading account, risk-free, trade 24 hours a day, 7 days a week, and you also get Trend Spider. Trend Spider is the newest in automated technical analysis. You get that as well as Trading Sim with gold level, along with my trade alerts, my trade coaching vis-a-vis members stock chart requests, which is where I review the symbols that our members submit for me to review. Also, you get Second Opinion, where you send me your thoughts on a trade, the symbol that you're looking to trade, and I will give you my feedback on what I would do with that trade. Suppose you're in a losing trade right now, and you want to say, hey, Bob, where would you put your stop loss order? Who's going to do that for you? And that's what I do with the gold level membership. Silver level memberships, great as well, but you have either Trading Sim or Trend Spider. And you also get my trade alerts, all my analysis. And if you want a no-frills program, just trade alerts and analysis, go for crypto. There's something for everybody at The Contrarian Trader. If you have any questions, send me an email, robert@thecontrariantrader.com. I hope to see you soon. Be well. Okay, good morning, folks. I wanted to do a follow-up to last night's tutorial on the EDC loss that we took. And thank God that we took that loss, because we stopped out of that position around $83 per share. Fast forward to this morning, we are down at a low of $68.87 in the pre-market. That's where market makers are pricing the EDC this morning. And we have broken down to new weekly lows. So a lot of damage is being done here on emerging markets, but I still like emerging markets. The question is why? Why do I like them so much? One is that I know that emerging markets typically trade inversely of the US dollar, and that's what I teach members. And how is the dollar setting up this morning? It's weakening up here a little bit, and we're threatening to break down below support. Now, if we get that, we may catch a bid on emerging markets. It may not be today, could be tomorrow, could be next week. But what I want to do is I want to know where my historical support levels are on the EDC, the emerging markets leveraged ETF. So let's go over to Trend Spider, and I'll show you what I've already done. Okay, so the markets have sold off overnight. We have the NASDAQ down over 1.5%. The S&P 500 has weakened up to a lesser extent, but it has weakened up. No buying this morning. And the emerging markets are poised to gap down. So what I want to do at 5:30 in the morning is identify what am I going to do for this new trading day? What is my strategy? Do I go hoping and running into the market at 9:30 as most of Wall Street wants me to do and buying stocks? No way. No way. That's not what we're going to do. We are going to set up our trading day right now. And in fact, I already did it. So first what I want to do is I'm going to bring up, this is a weekly chart of the EDC using Trend Spider, which is included with our silver and gold level memberships. So sign up quickly, because gold goes quickly. So if you're able to check out, you got to grab that membership, because there's only a few spots open, because it requires a lot more work out of me on a one-to-one basis. So I'm going to throw up on a weekly chart an overlay of monthly support and resistance. And you can see with the click of a button, I have it here. We have broken down this month so far below monthly support. Will it close there? We're not sure. It's still early in the month. A lot could happen. We could rally back and close positive for all I know. We want to keep an open mind. We're always open-minded. We don't want to hope when we should fear. So now what I want to do is overlay my weekly support and resistance levels. Now you can see that we have support down here at 58.58, but I think that we may find support above that level. And I've already set up my alerts to let me know when we hit those support levels. So I'm going to take off the weekly overlay. I'm going to bring up my drawings, and that's where I've already set my alerts. And TrendSpider's already told me we have possible support here at $65 per share. I already have an alert set. If we bounce off of that support level, if that fails, I have already programmed into TrendSpider where I want to be alerted if we break this support level and bounce off of this support level at $60 per share. So I'm all set to go for the new trading day. And go do your day job now. An alert will be sent to my phone. It'll be sent to my email, letting me know when we hit those support levels. There's no need to go looking at your computer all day long, because that's what the street wants you to do. They want you to over-obsess, staring at the screen all day long. Go do something else. Go play golf, right? You could trade off of this nowadays, okay? Don't go staring at your screen all day long, because you trade on emotion. You're looking for opportunity where there may not be opportunity. Let the markets come to you. Don't chase the markets. And that's it, folks. I'm going to get this out to you. I hope you get some value out of this video. And please sign up for the 14 days free trial offer. Become a member of the Contrarian Trader. I'll talk to you soon, and be well.